Recording. Guys, welcome everyone. Today's session will cover moving averages for long swing or mid focus on the longer term. So what we have on the chart, as you could see, features up on 15 minutes, and on the right you see the actual trades that are happening right now on the volume rate. You see the buy and sell, open PNL, PNL day, and the sell side, right? So between here, right on the bid and ask, right? So I'll take a pause. Thank you guys for joining. I know most of you guys been joining frequently. What it means for us here, right? Um, I'll leave it up to you guys. Give me your feedback. What do you understand from here, looking at the chart? And then kind of, I'll jump in and start fitting in, missing gaps or whatever. So let me flip this over on the longer side now that we are focused on long swing, right? So let's say we go to daily. We'll just stick to daily for now. We still have our chart. You see what happened here? We still have our chart from the last time. I'm just keeping it here for now. Turn it over to you guys. No one? Chris, Freddie, anybody else? What are you guys seeing? Yogi, feel free to jump in. You don't have to be shy. We've been doing this for too long, So feel free to throw questions, and I'll try my best to answer it, and then jump right into it.
My fault. I just came back.
No problem. No problem. No, I was saying I'll leave it up to you guys for 5 minutes, or take a few questions in terms of what do you.
This is Freddie. I guess for me, just my thought is, I'm really new to this. I happen to kind of start looking at the market from a day trading perspective, during a really good time, well into this recovery. And so most of my days that I've been that I've been playing in the space have been really positive, except for the last few days. And so I guess for me, it's just understanding how best to play the downside, whether it's puts or whether it's stay out or what, because this is all new to me on the downside. Everything for the most part has been all green until the last couple of days. And so I don't want to be, necessarily taking bad plays, hoping that it's going to bounce up when everything is telling us going down, if that's the case, right? I think people are talking about what's the strong support, where, are we going to keep going down or are we going to bounce back up? And so I'll leave it to the experts to tell us their thoughts. But just my thought is, where I'm at is, this is all new to me on the downside.
That's a very good point you raised. I took notes of the questions. I think DT is gonna join us today. I know he has some good insights in terms of other things, but that's Freddie. I have your question down. Anybody else, or what are you looking at? And then we could go, on top of it and start tackling things down one at a time.
Yeah, I don't have any particular questions. I'm thinking, because I'm using another indicator. I'm using the Ichimoku Cloud. I typically use the Heiken Ashen for mobile. But looking at it, if we fall below like a 2292 level, like, yeah,
That's the resistance level right here. So resistance, you got over resistance here, right? As you could see, this is R1. It pushed over. Remember I told you every time it breaks a support and resistance, it always has a nice, beautiful, fat candle here, right? It's kind of strong here. Now that I'm looking at longer time frame on a daily, right? what it means for us. So I really have to go back, since I'm doing my analysis, right? I have to go back and change some of the setting on the SMAs, right? So for example, I just have to increase it to, let's say, I could do 50, 100. I mean, this is what mostly used by big guys on the hedge fund side or whoever. They do it on a longer term, right? They look at 50, 100, and 200 day moving averages. There was a topic, actually, there was a good article that I shared with you guys about moving averages and how it works with in terms of support and resistance, and how does the guys play in the longer term. So option is obviously, you see, option is a different type of beast, right? Because we have obviously time decay involved and all that junk, implied volatilities involved with that. So that becomes a different game ball. But overall, it should serve you as the same purpose in terms of looking at your um, resistance, and where things are playing, right? So look, I have 20 here, but then if I change this to, let's say, my 200, obviously is gonna be on top, right? I'm changing this as you guys could see it. Now it will be a different setting. I'm showing you guys so you guys get a sense of what am I looking at and why it's changes. You see, right here, automatically it was at the bottom from 50. When I change it to 200, it's just holding right on top here. Now this is my 5-day moving average, is the green one. This is our short-term place. If I change it to, let's say, for example, 50-day moving average, right? When I'm playing with long-term, I want to see 50-day moving averages. What is it holding as? So I could easily say, hey, look, you see how it changed from top all the way to the bottom? So now it's reverse. So this is the 50-day, the green, yellow is the 100, and then the red is the 200. Now we are looking at a daily chart. Daily chart typically applicable to, let's say, maximum a month out if you want to go play things out for options, or even for general stocks if you want to hold it for like a couple of months, any news out, you want to take advantage and get rid of it, boom, one shot. But if you really want to get into like long term, you want to look at your weekly, right? Look what happened, right? Last week, what started here, right? This from this point came down here, but we're still kind of holding here. It looks like below 50-day moving averages. So it's kind of holding the support. It looks like it's almost ready to break down. And then, you kind of do your analysis based on that. So for here example, you see the volume, it's been this week, right? What happened last week, like the whole week, it's been kind of, shifted, that big jump. It happened all the way from 30.70 to all the way down here. Now it's somewhere hanging in between. So this is more of a longer term if you want to buy stocks, and then, on it for long-term holding. Or even if you want to go farther, let's say you want to invest in your portfolio, something that's too long, right? This might not be a good example. Let me just switch it to Apple, right? I'm just showing because that's a futures market. So look at this one, right? This is your all-time since Apple was like what, down to like $14, $15 or even less. So it's going all the way back. It's nicely holding above all its 50, 100, and 200 moving average. So it's kind of still up. The trend is still up, and the squeeze has been upholding. The RSI is still above. The volume, it's not that strong, as you could tell, compared to the past. Like look, August here, like there was a lot of volume. So this is kind of like the average point or below, right? So I'll take a pause here, and then I'll go into shorter time frame in conjunction with the larger time frame, how to play this if you're looking to play stocks or options in the longer term.
So, Prof, for long-term chart, what kind of moving average do we use? And then for day trade, what kind of moving average do we use?
So obviously for shorter time frame, we have 5, 9, and 20. That's what I use. You could even go down to 3, 9, 20, 3, 8, 20, whatever you prefer based on your trading styles, right? So anything above 30 minutes or hourly, I could change it, until daily. When you go to the daily candle, as I showed earlier, fairly, I think you could use, 5, 9, 20 for like just a simple short term. Let's say if you want to go out couple of weeks, 3 weeks, max 4 weeks. If you go over for 4 weeks, then you might have to change your SMAs to longer time frame, because then you're calculating your 50-day, 100-day, and then your 200 days. So it's been holding nicely, all of it, right? So what's happening with SPY? Let's just flip it over to SPY. I want to. So when you look at this positions here, right? Look how nicely it's still above. It kind of broke, right? Investors were looking at this if it's coming down here, right? This is the longest term. This is a 200-day moving averages. So
Right.
in at max time, it may not be that relevant, but if I go to, let's say, weekly, it's still kind of, it broke down. Look how it came down, right? See, automatically as I change my time frame, the support resistance, it automatically changed from the moving averages. It is 50, 100, 200, right? Look, now it's a weekly. I was looking at monthly, it's holding above. On a weekly, it came down below. Now it's up, and now it's holding semi-touched the 50-day moving averages. This is a weekly chart, as you can see here, SPY on top, right?
Right.
And if you go switch it down to 1 day, right, daily chart, it will automatically change. Now look what happened. You see what happened here? That drop that came, few in somewhere between May. Here it fired up. Now RSI, obviously you got to look at your RSI, your buy sell volume, whatever the case you're looking at, and it's telling me that it's almost touching a 61.8 level, which is 293. This is a very, very strong level on a Fibonacci, right? So this you guys could definitely use. This is a voodoo. Like when I say voodoo, it works like super magic. Try it on your chart. Even if you do 15 minutes day trade, I will go back into that. But if you set a Fibonacci on your daily, this should be your levels to watch. These are like the hard levels. 61. You see all the red ones, I kept that as hard levels. You see 100, right? Then you have your 61.8. You have your 50. This is kind of like the buy zone, kind of like the hangout zone, right? This is where the hangout. So this is your yellow zone, that if it drops below 61 or above 61, it's always nicely held. So remember what I had mentioned to you guys in the past, that every time a Fibonacci level is broken, you will always see a fat candle. This is like, I've been using this for a long time, and it's been always nicely, look. Oh, let me just try to draw the bubble. Why is it not? Okay, edit drawing, the bubble here. You see, within this, look, every level, every time it broke one of these hard levels, look at the candle size. You see the level it broke. So you could set this up on any time frame. It should work exactly the same way. So what I used to do during my work days, when I used to work in the office, if I'm trading, I would follow this strictly. First, 15-minute candle before I enter a position. So I'll go back and show you guys an example on this one. But this is longer term. Obviously, you see how it kind of held the zero level here, right? 218 from the high to the low on the Fibonacci's. This is a completely separate discussion that I will do minute by minute on Fibonacci, but I just wanted to show you guys that I left it there. I did the daily, and I wanted to see how it's holding the trend, but it kind of fell behind trend, and it's telling me, hey, watch out. It's touching that 200-day moving average kind of as a support, right? We are at what are we at? 304. So it's still there. It's been jumping the last couple of days, right? It's been jumping here and there. So I'm watching it. If it breaks below, then my next level will be to watch this one here. 293-ish, to be accurate. And obviously you have that resistance here from previous bounce up. And if this loses, then this is my target, right? On the daily, 72. So this probably, let's say 1 day, 2 day. If it gaps down, that could be 3 day here, which is Monday, Tuesday, Wednesday, Thursday, Friday. So Friday, we'll see where it hits, right? I'm just using it as a hypothetical example, but it could obviously reverse and get back on this line. But you see how the line is kind of holding from bottom up, and it's just right on that triangle, kind of like the semi triangle on this side, right? So this is the level I'm watching right now. I don't know if it's gonna fire up again or fire down, but it looks like it might be firing down. So I'll pause here, open it for a quick question, and then jump into how you guys could kind of play between your entry and exit time. I've been testing it out, and I see it's been working kind of, in my favor, even though going back to Freddy's question, that what happened in the last, 2 days of trading session, right? Fed kind of gave us a hint on Wednesday, right? Hey, this is what's happening. And investor, what they did, they start pulling out money again, right? And the little bump happened, young trader came in, they start buying up, but not a lot of volume, right? When you see institutional, that's what becomes more important, right? So I've been sharing a lot of advanced stuff with you guys. I'm gonna start implementing, advanced type of stuff where you guys could see the money from the buy side, sell side, you know, in accumulation and then distribution, what's coming out of the market, what's coming in. I'll start sharing those so you guys don't get overwhelmed with all the information. So really you have to, chart is the most simple and the most beautiful thing. Trading should be as easy as literally playing a video game, but you have to be careful, right? You have to know how to turn your gear and how to shift your gear and kind of slow down. What happened to me, as you guys know, I'm a bull by heart, right? Market's been this way for the longest. This is probably like the historical bull market. Oftentimes when things happen out of nowhere, I do want to take the put side, but then given the experiences, you see how things bumps up, I kind of held back, right? Even though by chart, I wanted to take puts, but then I said, you know what, let me step back a little bit and see what's kind of work backward type of way. So, things pop throughout the day, it dumps throughout the day. That's where we are in between right now because it seems like a lot of indecision and not even half the money flowing into buying. It's more from, big guys are selling throughout the day, morning comes, pre-order, people are buying, it's a dip. Hey, let's go buy the dip. Let's go buy the dip. So that's when you see like the morning bounce and then boom, starts, forming either the kangaroo shape or the dragon shape, whichever, you want to call it. But what it's telling me here doesn't look so good, even though the RSI is pointing up. Squeeze is kind of, looking to push up, but the sell volume, look at the sell volume. It's not really that healthy, and the candle is still red. I'll pause here. I know I went over a bit. So I'll pause here, ask me a question, and then we'll move towards it. Any questions? Maybe you guys are on mute. I don't know. I can't hear you.
In your,
Questions?
in your career or whatever your expertise, have you seen a lot of benefit to doing swing trades on Friday after like a big down day, or is that too risky? I think Wyatt said that he got into some calls on Friday. I mean, obviously hoping late Friday, like at the end of the day, hoping that we get some gap up or whatever. Is that something that you do often, or or not, or is that just too risky? We don't know. Like, obviously it could pay off pretty good, but if it doesn't, then you're in a world of hurt, before you even start on Monday.
Right. Yeah, that's something I wanted to raise my concerns around it. Those becomes more, I've been taking notes. I've been taking a lot of notes around, algo trading time, because since March, it looks like their timing has been changed. Previously, it was very nice, right? When I say very nice, meaning Fridays after 12, it's a dead zone, right? Wyatt, jump in and let me know if you think I'm on the right direction. So before March happened and all that, I always noticed this Friday after 12 o'clock, it's usually like a dead day. Things starts falling down. Monday, it falls down a little bit more. It starts picking up, right? Afternoon, late Mondays, people start buying. That's been historically the trend, how the algo works. Given that a lot of the bigger traders, the hedge fund managers, even they were confused, right? Because a lot of them, they came back and say, we do not really know what's happening. We need to either adjust the algos or change the strategy so we could, rock on the market. So when you see 5 different ticker at the same time, it all works identical. That's why I've been noticing that. I said, you know what, this thing's is algo driven. Computer is buying and selling, dropping price, and it's moving it up again. It's all in parallel. Every ticker. Was it Michael or Freddie? I think you guys had raised the same thing.
Yeah, I spoke on it on Friday. I was saying that look at all these tickers all moving
Yeah. You
exactly the
mentioned,
same on the
and
sparse
then
chart.
exactly you saw that Michael mentioned that it's Apple, BA, I think, and a couple other ones he had mentioned. I don't remember top of my head. All works the same way. You see it buying, selling, whatever. It's dropping in the same nature, picking up on the same nature, right? So going back to Freddie's question, do I see it that way? Sometimes yes. Friday becomes, if you do, zero DTE, either XPX, Tesla, because we try to stick to Tesla on Fridays. It's so cheap, right? It could make us very good money, or you kind of lose all of it. So for example, the 950 put in the morning, it was 40 cents. I think end of the day, that thing jumped almost to like $9, if I remember correctly. That put, right? So it was like bouncing up, bouncing down. It kind of lost its fume in between going up. Typically, we've been seeing the big jump happening Thursday and Friday, right? But this completely reversed this Thursday and Friday. Um, pause me here if I'm wrong, but that's what I've been seeing. Tesla was really good. It was jumping up Thursday and Friday. We were doing really good, making good profits on those, almost 300-400% with these cheap ones. Now with the sell-off, the nature of it has changed. And I think it's becoming identical, but we'll see. Tesla is pretty strong, but for if you want to play SPY, zero DTE, those could be cheap, or pretty cheap. You could turn it back. Now going into the weekends, that's why a lot of time, BT, myself, AJ or whoever, even Wyatt would agree that holding over the weekends is very risky unless you are very, very far out the money, or at least month out. If you have short expiration that expiring Friday or Monday, either SPY or highly priced premium option, then it becomes risky. That's why I try to personally avoid the big ones. For example, Tesla, Amazon, the one that moves pretty monstrous move either up or down. If we could catch those from the morning time, which I've been noting it down, I think I might want to start playing one or two, not a lot, and obviously do swing. Swing becomes risky if you have a lot of money involved, to hold it overnight. If it's something cheap, let's say you bought 10 contract for a penny or 2 penny, those becomes a lottery play, right? You go into the lottery play, say, hey, I want these numbers. If you lose $2, it's fine. But if you make $100,000, $1,000, right? $2, that's That's pretty dope, right? You make good amount of money of that. So those becomes a lottery play. And obviously, my suggestion, if you really want to go long, it it really needs to be assessed on a different level in terms of volatility. Theta is a big thing if you hold it for too long, and if you have theta with like over $1, that means every day you lose $1. So that becomes challenging if you're paying, for example, $10. Next day you are down almost $1. So that kind of eats away the premium and the theta kills it. So we end up losing, almost like $100. So it's up to you, your trading styles. Um, but dark pool has been pretty favorable to us, from what I had noticed. Why jump in and give them your example in terms of how you've been playing those levels and what it has been doing to you. I know a lot of the guys are new. They don't have a lot of expertise around dark pool. Between myself and you, we've been playing that just on the testing side of it, right? So I'll let
Right.
Wyatt, talk about it 2 seconds, and he will definitely tell you the value added to the dark pool, because that's where the big money is, right? You always need to
Yeah.
the big money, they're up or down. So Wyatt, over to you.
Sure, sure. I'll just share a little bit on the experience. So basically on the dark pool data, whenever it's shown, basically nobody knows where is the direction. So it could be a big buy or it could be actually a big sell. So I usually take on some of these non-directional option strategy like strangle, or you can take on a straddle. Straddle I find is way too expensive because buying and selling at the same strike price usually costs a lot of money. So instead of doing that, I kind of buy the cheaper option, which is a little bit of money, as well as buy a cheaper put that is also a little bit of money. So I tested about 5 to 7 tickers in the past couple of weeks with a strike price that is about basically delta 30 thereabout. And then the results has been very positive. So far, every ticker I bet about $500 each, which means about $250 worth of call and $250 worth of put. And then I think I posted a few examples. Some of them, the return is as high as 500%. And in fact, some of the unknown tickers, HP, there's a ticker called HP, which is actually a oil rig company. And in fact, it returns something like 2,500%.
Yeah, so often when it's played, I've been sending out, sharing a lot of it with you guys, so you guys get a sense of it. Typically suggested when you see those level, you play on the same delta. If it's delta, 0.10 on the put side, you should also play the delta 0.10 on the call side. Obviously, you have to look at the ATR or the DTR, meaning how far a stock moves on a daily average versus your average range. So if you could catch those, I'll go more into those. But this session is fully focused on on the moving averages and how it works as a long term for support and resistance. So what I showed you guys, now I'm looking at a 5 minute chart on my screen. So as you could see, the whole set of SMA, the moving averages is all over because I have higher ones, right? I have 50, 100, and 200. So it looks differently, right? As you could see, it might be a crossover. It could be a dead cross right here, like kind of around this range. It looks like it's almost touching it, but we'll have to see what happened. Look, the crosses here happen, cross happened here. It came down, and lost it, and it's continued to coming down, but now it's a pickup, right? See how Asia market does, 3 a.m., obviously there might be more buying and selling. And I'll go more into those, how to use the dark pool data. I'll show you guys live examples. As Wyatt mentioned, it's pretty good. If you could play it, and it's cheaper. If you have, let's say you make profit 1,000 out of your daily trade, you could put $50, $60, buy one or two, and see how it works for you, or even paper trade, right? See what it does for you, so you get a sense, because that's where all the big traders are start looping into, that does not have access to and sell side. We do not know, so but they kind of estimated. If you could put those on the chart, if you guys could go, I think Monday last week,